Meta just reported second quarter results that pull in two directions at once. Revenue came in at $60.8 billion, beating estimates and rising 28% year over year. Yet net income fell and earnings per share missed by a wide margin. The gap comes from a sharp jump in spending, driven by AI infrastructure and one-time charges. This is the story of a company pouring money into the next platform while the current one keeps delivering growth. Let's walk through the numbers. Revenue reached $60.8 billion, up 28% from a year ago, or 27% on a constant currency basis. That cleared the consensus estimate of $60.26 billion. Net income, however, dropped 14% to $15.85 billion. Diluted earnings per share came in at $6.18, well below the $7.23 expectation. Total expenses climbed 55% to $42 billion. That figure includes $2.4 billion in legal charges and $1.2 billion in severance from a May headcount reduction. Operating income fell 8% to $18.8 billion. Strip out those legal and severance items, and operating income would have risen 9%. The operating margin compressed to 31% from 43% a year earlier. In short, top-line strength was real, but the cost structure expanded even faster, pulling profits lower. Nearly all of the revenue still comes from the family of apps. That segment generated $60.37 billion, up 27.9%, and delivered $23.39 billion in operating profit. Average daily active people across the family hit 3.60 billion in June, a 3% increase year over year. Instagram alone now sits above 2 billion daily active users. Reality Labs remains a smaller piece of the picture. Revenue there rose 16% to $431 million, helped by growth in AI glasses that offset softer Quest headset sales. The operating loss in Reality Labs was $4.62 billion. The core social and messaging apps continue to scale and monetize, while the hardware and metaverse efforts keep absorbing cash. Research and development spending jumped 67% to $21.7 billion. Capital expenditures, including finance leases, reached $31.08 billion in the quarter. Free cash flow was only $784 million. Full year 2026 capital spending is now guided between $130 and $145 billion. Management points to early returns from the AI push. Meta business agents are already used by more than 1 million businesses every week. The company also highlighted Meta One subscriptions and new models called Muse Spark 1.1 and Muse Image. On the advertising side, click growth rose 8.3% and conversion rates improved 15.7% on Facebook. The heavy investment is visible both in the cost lines and in measurable ad performance lifts. Two large one-time items weighed on the quarter. Legal charges totaled $2.4 billion. Severance costs from the May workforce reduction added another $1.2 billion. Looking ahead, the company flagged ongoing youth-related legal trials scheduled across the United States through the rest of 2026. The chief financial officer noted these cases may ultimately result in a material loss. These items explain part of the profit pressure this quarter and leave an open question mark on future legal costs. For the third quarter, Meta expects revenue between $61 and $64 billion. Full year 2026 total expenses are guided in a range of $165 to $169 billion. Combined with the elevated capital expenditure outlook, the message is clear. Spending will stay high through the rest of this year. That trajectory suggests the company is committed to building out AI capacity even if it continues to pressure near-term margins and free cash flow. Investors will be watching whether revenue growth can keep pace with the cost base as the year progresses and into 2027. The bull case rests on continued strong revenue growth and early signs that AI tools are lifting ad performance. The bear case centers on compressed margins, heavy ongoing investment, and unresolved legal risks. I've stayed on the sidelines with Meta for a long time, waiting for a cleaner entry. This post earnings dip finally felt like the right moment, so I'm putting capital to work and starting a new position here. It's money where my mouth is. I remain bullish on the long term combination of the advertising engine and the AI build out. This video is for informational and educational purposes only. It is not financial advice. Always consult a licensed financial advisor before making any investment decisions. If you found the breakdown useful, consider subscribing for more earnings coverage.